keep in mind that, when we were spun out, we were spun out through a dividend, and it wasn't a surprise to us that, during even already on that first day of trading, when you're spun out through a dividend, particularly in our case, it was at least, our owners, our initial owners were people and funds that bought a large cap dividend paying stock. And we're not that. We were never going to be that.
Welcome to Seeking Alpha's CEO interviews, informed conversations with the best and brightest CEOs in the publicly traded markets. Quality of leadership is a decisive factor in stock performance. Our show provides intimate and in-depth investing discussions with industry leaders across all sectors of the marketplace. We publish excerpts on social media platforms and the full conversations on seekingalpha.com or on our highly rated Seeking Alpha mobile app under CEO interviews.
Hi, I'm Rex Crum, Technology Managing Editor at Seeking Alpha, and joining me today is Martin Schroeter, the Chief Executive Officer of Kyndryl Holdings. I would say one of the more interesting companies to have spun off in the last year, about roughly 9 months ago. They were part of IBM, but now they're on their own. And Martin's we're going to talk a little bit today about who Kyndryl is, what Kyndryl's doing, and kind of the lay of the land for the company's services and business. Martin, thank you for taking some time this afternoon to speak to us.
Thank you, Rex. I appreciate it.
Yeah. Well, I guess first off, it's been roughly 9 months since Kyndryl became its own publicly traded company, spun off from IBM. How would you describe how the first 9 months have been so far, just in a brief, brief or wide description?
Yeah, look, it's been an incredible journey, and as you would imagine, in a spin, there's plenty to work on. There's plenty of challenges to fill up your brain with. I was excited back on January 15th of last year to come back to work. I was happily retired at the time, but boy, I am as excited about the opportunity I see ahead of us as I was on day one. But look, this is challenging work. We are obviously, as you said, spun out of IBM, so we have a lot of work to get through, internal processes that we inherited. You don't, as you are probably aware, you don't get to pack your own suitcase for this journey. So we were given a commercial relationship with IBM, which we're working through. We're coming off of, as I said, all the internal processes that we inherited from IBM. We're bringing our customers on this journey with us, and all of that while we're trying to build a new culture for the 90,000 person startup that we are, and we're trying to, we want to make sure that we take advantage of the opportunities ahead of us. At the heart of what we do is really meaningful work that affects how the world operates every day, right? The banking systems, the airline reservation system, the supply chains, the mobile phone network. So we touch billions of people every day because we run those systems. And we help our customers make those systems work better. So look, it's been very exciting. It continues to be very exciting. This is a phenomenal opportunity for a really important company to chart a new course with its newfound freedom of action and bring, as I said, bring our customers on this journey with us.
How would you say having the ties with IBM, coming from the IBM family and still having a fair amount of connection with the company, how is that beneficial to you guys going off on your own? And what do you see as the challenges that you're facing in the current environment?
Yeah, it's a really good question. At the end of the day, the reason this is so good for our customers, the reason this is so good for us as a firm, and quite frankly, we'll convert all of this into a lot of value for our shareholders, is that we have now an opportunity to really do two things that we didn't do before. One is invest in the business. IBM chose not to invest too much in this business. It had other opportunities, and right at the heart of why they wanted to spin it out was this realization or this recognition that this business needed to be invested in if it was going to grow, and IBM wasn't going to do that. So we have an ability now to invest in the business and create new capabilities, things our customers were asking us to do, but we just didn't have the capacity to do it. And secondly, we now have a freedom of action that allows us to be part of the ecosystem that really matters to our customers. And when you combine an ability to invest and create new capabilities, and an ability to use your freedom of action to enter the ecosystem that's really relevant for your customers. Customers are obviously quite excited about this as well. So we're taking advantage of both of those things. All the while, we do have to transition out and what I would call, unmixing paint, which is what IBM went through last year to get us ready for the spin. There's still a lot more we have to do to get off of all their systems, to change our processes, et cetera, et cetera. So there is a ton of energy for the change that's ahead of us, because we're all trying to run a faster and a flatter and a more focused organization. And this opportunity now to invest and use our freedom of action allows us to do that in a really compelling way for our customers.
Just a moment ago, you mentioned some of the industries that you're providing managed services and such for. Maybe you could take us through a little bit about where the opportunities for the most growth lie, kind of like the lay of the land as far as you see it right now.
Yeah, sure. It's a great question. So look, we were very quick, as I said before, to take advantage of our freedom of action, and we built partnerships. We're building partnerships with all of the cloud hyperscalers, the Microsoft Azure and AWS and Google Cloud, as an example, along with many, many others like Pure Storage and VMware and Cloudera and Dell. And we have a lot more in the works. And when you look at where we're strongest and how we can supplement that, our biggest customer base, for instance, is in banking. How we can now help our banking customers really take their systems of record, which is what we're running, and now get access to the kinds of innovation they see in the cloud and the kind of innovation that's being delivered by Pure Storage and Cloudera. When you see when customers see how quickly we were to take advantage of this, we see areas of growth in the kinds of technologies that you would expect. So we see a lot of growth in helping our customers move into and manage their workloads on public clouds, which is not where we really were before. We see a lot of opportunity to help our customers as they move into public clouds, to help our customers with their data journey, whether that's the architecture, whether that's the security around the data, et cetera, et cetera. And obviously, if you talk about security, you also have to talk about resiliency. And we see a huge opportunity for us as we help our customers, again, take advantage of innovation in the public cloud space. We see a huge opportunity for us to help them build the resiliency they need. Again, given the kinds of systems we're running, it is super important for us and it's super important for our customers to make sure these systems retain the characteristics of resiliency they saw or they experienced in their old architecture. So lots of growth for us. We have a lot of work to do to move into these spaces and building skills, building our certifications, getting our teams credentialed. That's what sits underneath these partnerships, is a joint investment in skills. But we will move into those areas with our existing customer base, which again, they've been asking us to do for a while, but now we'll move into those with some investment dollars, and we'll move into those with a bigger ecosystem that allows us to really help our customers think about what's next in their own digital journey.
And now, Kyndryl, you guys have come out as a public company in a really interesting, at a really interesting time. And you talked about some of the industries, the public cloud in particular, just growing and growing here. At the same time here, we see talk almost every day about, the looming recession, a recession on the way, the economic situation, things that, we didn't foresee maybe 6-8 months ago. How would you say Kyndryl is positioning itself, or how can you see its direction? Maybe, I don't know if you're having to possibly modify its direction, or how you see its direction being affected by some of the economic challenges that could be coming down the road.
Yeah. Look, the prospect of a recession is obviously something that's top of mind for a lot of people right now. And when we look at it, though, we've got a business that it runs what I'll call kind of hearts and lungs, right? These are essential services. These are mission critical IT systems. So for us, there is there's a little bit of insulation from a cycle, because you don't get to decide if you want an infrastructure or not, you do need an infrastructure. And then even within our business, if there is an economic recession, I'm not sure there's going to be a recession in, for instance, cybersecurity. I think people are going to continue to invest and need security services. So while I do think, as you said, recession is on a lot of people's minds right now, I think for us, it's an opportunity to really stay focused on the three things we've laid out for our investor base, which is a focus on getting these alliances running and building $1 billion business from these in a reasonably short period of time. It's an opportunity to stay focused on our advanced delivery efforts, which allows us to free up some of our people who we can re-credential and put back into those accounts with these new certifications like Azure and Google Cloud and AWS as an example. And it gives, it gives us an opportunity to engage very directly with the accounts where we just don't have a good long-term economic footing, one that allows us to invest at the level we'd like to. So we've laid out for our investors three what I think are idiosyncratic opportunities to us around alliances, advanced delivery, and account focus. And I think, again, even in with the prospect of a recession, though executing on those three are still going to deliver for us the kind of benefits, but they are idiosyncratic to us.
You mentioned your investors, and I'd be remiss if I didn't ask this, and it can be a fool's errand at times to constantly watch the stock market, but since going public, the Kyndryl shares have taken a bit of a hit. I mean, I'm not trying to, I don't want to sugarcoat, but I'm not trying to make light of it either. Yeah. What's your response to how the market has accepted Kyndryl as a publicly traded company? Because it seems like, the share price, I believe when you spun out was around $52, and Friday it was a little over $9. We're recording this on a Monday. I'd just like you kind of your take on that.
Yeah. So look, when we spun out on November 4th, and I think we closed on that first day of trading at $26 and change. So I think that's sort of my for me the starting point. Obviously, as you said, we're down now in the nines. I think I'd say a couple of things, and we are very focused on how we close what we see as a pretty substantial value gap to where we should be valued. And I think there are a couple of short-term reasons that affects that will go away over time. And then again, we have to build credibility with the street, and we have to deliver and execute on the plans we've laid out in order to narrow and close that value gap. Keep in mind that when we were spun out through a dividend, and it wasn't a surprise to us that during even already on that first day of trading, when you're spun out through a dividend, particularly in our case, it was at least our owners, our initial owners were people and funds that bought a large cap dividend paying stock. And we're not that. We were never going to be that. So we expected from that first day close at 26 and change, we expected that turning over the entire shareholder base was going to put pressure on the stock as we came out of all of the passive investors, for instance, who bought IBM because they're an income fund or a large cap fund. They just couldn't hold us. So we knew there would be some pressure in the beginning, and we felt it, we saw it. And then there were a couple of other things that we're working on and we're watching it because, again, they're short-term in nature. So we are working on getting some more sell-side coverage. I think we'll get some more sell-side coverage over the next month or so. That will help. Because they'll help tell the story. They'll help our potential investors do work on us. And again, in a world where you have to, tell the story and sort of prove and establish your credibility, sell side certainly helps with that. And then the other element I think that we're seeing in the market is when IBM spun us out, they retained just under 20. They retained 19.9% of the shares. And that's sort of, in a very simplistic way, it's just overhang. And IBM has announced that they swapped half of theirs, half of the 20, half of the 19.9 to a bank that's executing now every day. So obviously having a big seller in the market is sort of the definition of overhang, and we'll work our way through that as well. But we see, I think our investor base sees a very substantial value creation opportunity as we build credibility, as we build more sell side coverage, and as we get rid of this overhang. I think we all see a very substantial value creation opportunity because, look, we're an $18 billion revenue company. We have laid out a very clear plan on how we get back to revenue growth, and the business hasn't grown in many, many years. And we've laid out a very clear plan on how we improve our margin profile and improve our cash creation capabilities. And I think with that, executing on that plan, we will see the value creation start to build in the stock as we get through some of these shorter term impacts.
Last question, Martin. You said at the start of our conversation that you had been happily retired. I guess, was this too good of an opportunity to pass up, or were you just bored at home and decided, hey, let's do something else now? How did you end up coming back to Kyndryl after, as you said, being retired?
Yeah. Look, I wasn't bored. I was enjoying it. It was while the whole world was trying to figure out how to navigate COVID, I could just stay at home and not have to worry about it. But look, when I thought about what I enjoyed at work, and I spent 27 years at IBM, and I enjoyed my career there. But when I thought about what I liked about it and what this opportunity really represented, for me, the nature of the work is really important, and I love the role that Kyndryl plays in the world, and I love the role that Kyndryl plays in how the world works. So that's very appealing for me. Obviously, I got to build my own team, which for me, the people with whom you work is top of the list. And then finally, it's a spin, and as I said, I talked a little before about the freedom of action we have. In a spin, we have an incredible freedom of action to build a strategy, to build a culture, to really build a firm, and that has and continues to have so much appeal for me. So between the nature of the work and the people with whom I get to do it and the freedom of action we have, boy, this is an opportunity I was not going to miss.
All right. Well, Martin, thank you for sparing some time today out of I'm sure you got other things you have to be doing there in New York. And I just want to thank you for taking some time to go through the Kyndryl story right now. We really appreciate it. Again, with Martin Schroeter, Chief Executive Officer of Kyndryl Holdings, I'm Rex Crum for Seeking Alpha.